Welcome to Copper's latest opening bell report. Today, we're diving into a new analysis on how Bitcoin behaves following fear readings in market sentiment data and why these signals matter. Since January 2024, we've tracked each point when market sentiment shifted from optimism to fear, those moments when the mood turned negative. For every fear event, we measured Bitcoin's price movement over 12 weeks, analysing returns, maximum drawdowns, time to local lows, and recovery strength. The big question: can fear events reliably signal market bottoms and set the stage for recoveries? Let's get into the numbers. Our dataset includes over 40 distinct fear events since 2024, each mapped over a full 84-day window, enough to catch the entire fear-to-recovery cycle. What emerges is a clear pattern. After a fear reading, Bitcoin tends to dip for about 3 to 4 weeks, then enters a 6 to 10 week recovery phase. Historically, the drop from a fear signal to the cycle's bottom averages about minus 12%, with most bottoms landing above minus 15%. Only rarely do we see deeper drops beyond minus 20%, and those tend to reverse quickly. So, what's the practical takeaway? When Bitcoin falls 10 to 12% after a fear spike, history strongly suggests the market is near a bottom. Most drawdowns hit their low within 20 to 30 days, then gradually flatten or begin rising. From these entries, forward returns look promising. On average, Bitcoin rebounds plus 1% after 1 week, plus 6% by week 4, plus 12% at week 4-8, and plus 14% by week 12. Crucially, there haven't been negative returns in any cycle since 2024. Every fear event leads to a positive result within 3 months. If we zoom in on performance from the actual lows, the numbers get even better. Average returns stack up to plus 15% after 1 week, plus 20% after 4 weeks, plus 27% after 8 weeks, and plus 29% after 12 weeks. Every cycle has produced a positive recovery, meaning fear is nearly always a local capitulation, never a structural breakdown. The median rally after a bottom is 15 to 30% over the next quarter. Win rates back this up. Bitcoin traded higher than its fear entry price 55% of the time after 1 week, 62% after 8 weeks, and 68% after 12 weeks. From the local low, that win rate jumps to 100%, no matter the time frame. Put simply, buying at fear gives you about a 2/3 chance of making a profit, and buying at recent lows has always resulted in gains. Now let's apply this to current market conditions. The latest fear signal appeared October 11th, with Bitcoin at $115,100. Over the next 6 days, the market dropped to $103,530, a loss of 10.1%, lining up almost exactly with the historical median. We're now about 11 days out from that fear reading, smack in the middle of the average bottoming window. Unless Bitcoin drops below $102,000, a full 12% from the original entry, the stats say we're likely at the low already, setting the stage for recovery. Historically, these drawdowns have marked exhaustion points, leading directly into the rebound phase. Projected forward, the recovery path is clear. From the October 17th low, the model suggests Bitcoin could reach $121,000 in 2 weeks and $133,500 in 12. If we stretch to the historical upper range, returns could hit $127,000 in 2 weeks. $145,000 in 4, $155,000 in 8, and $156,000 by week 12. Using initial entry levels, the upper band estimates climb as high as $174,000, depending on how long the recovery runs. Bottom line, if the October low holds, Bitcoin could be entering the early days of a typical fear recovery phase. By mid-December, the median scenario points to a price between $125,000 and $130,000, with the top-end outlook possibly testing $150,000 or higher into early 2026. These ranges fit the strongest recovery cycles seen in the past 18 months. all the data supports a bias toward higher prices from here. Drawdowns beyond -15% are very rare, and the probability of a profitable outcome increases the longer Bitcoin holds above its fear-triggered low. Even as post-ETF trading compresses these cycles, the rhythm endures: downward spike, brief consolidation, and statistically strong odds of a 15 to 30% rebound. In short, while sentiment is still cautious, the evidence is overwhelming. Fear signals a reset, not a reversal. The historic template fits perfectly: a sharp correction, a quick consolidation, and a strong probability of moving higher over the next few months. That's all for this episode. Thanks for tuning in to Copper's Opening Bell. For more detailed information, don't forget to download our full report.